All right, so we're gonna get this started. Today's topic is kind of boring. Say that. Nobody loves taxes, nobody loves bookkeeping. So both of them together is probably the worst thing to have. But we're gonna try to make it fun, entertaining, and just kind of give you guys some pointers. Obviously, disclaimer, Sarah is a CPA. I am an inactive CPA. We both are not tax experts, so disclaimer out there. So we're going to give you guys the preparation from a bookkeeping standpoint, which is financials and all that stuff. That's our expertise. So that's where we're going to go with this. So we're going to give you tips on how we handle it, how Sarah is a bookkeeper and she has clients. So how she handled it for herself and her clients. So that's kind of a different perspective there. And then we'll go from there. So first things first, let me put the presentation. But actually, Sarah, you can just go ahead and give us all like a brief summary for those of you that don't know you, your background, real quick.
Yeah, so I did one tax season, maybe no, I did two full tax seasons while I was getting my accounting degree and realized that I was very allergic to tax season, so I didn't want to go through that anymore. And then I was fortunate to fall into when it originally started at more of a controller position for an emerging development general contracting company. He also had a property management company and had personal real estate investments. So just kind of fell into that job, and we grew from 8 million to 80 million in revenues, annual revenues, in like 8 years. And I um, was essentially CFO after a couple of years and grew the accounting department there. And the whole time I was there, most I quickly got up to six figures with him, but I was like, I can't become a real estate investor because we were dealing with, 10 million, 20 million, $50 million contracts. And I was like, I can't do this. And, he was building his rentals from scratch and, new builds and all this other stuff. And so that was my, what I was seeing. And I was like, I can't do this. And all of a sudden, one day, I'm like, wait a minute, maybe I can. And so my husband and I actually came and became investors in 2021. And that same year, I told my boss, I was like, look, I'm tired of building your wealth. I want to work on building mine. And he said, that is great. I'm happy for you. Go for it. And so I looked back on my time with him, and at the end, I was mainly just taking calls with lawyers, answering stupid questions that had been answered in emails on these huge contracts. And I'm like, this is boring to me. This is so boring to me. I want to be, active again and doing all this. So I was like, the scaling in the early years was my favorite part with him. So I was like, I'm going to start a bookkeeping company and help other investors do the same. And that's what I've been doing for about 4 years now. 3.5 years now. And so next spring will be four full years since I actually started my company, and it is very fulfilling, and I absolutely love it. My husband and I have long-term rentals, short-term rentals, and we actually just bought a laundromat this year. And I am scaling my bookkeeping company as well, helping real estate investors. This is not a sales webinar at all. You don't ever have to use me. Kat and I are very passionate about helping real estate investors get educated so they can become more familiar with bookkeeping and accounting and taxes. I really feel like most people say bookkeeping sucks because they're unfamiliar with it. They haven't been exposed to it much. And so this is our little monthly webinar where we kind of trickle information to real estate investors to get them more familiar with the topic and so they just don't drown it. Your financials are so powerful, and I just kind of want to get that education out there. Again, not no sales pitch here ever on these webinars. We are literally just doing this for the good of real estate investors. So that's a little bit about me.
And I know most of you here know me, but for the people that are going to watch the recording and don't know me, so I am an accountant, had an active CPA license for a couple of years, made it inactive last year, currently working on getting it back active. But for the last 6 years of being a real estate investor, quit my job 4 years ago, and I'm currently living in Colombia, kind of semi-retired. So real estate did that for me. And one of the main things that I always say is like being on top of my finances was really what got me here, because if I had just been winging it for the entire time, I probably wouldn't have been able to quit my job. And so a lot of people ask me like, how do you do it? Blah, blah, blah. So I always say like, I know my numbers from day one. And I think that if more people knew how important it is to have your numbers, to have these projections, to understand the financials, they'll be able to reach their financial freedom goal faster. And so that is why we're doing this right here. And Sarah and I have the same vision on that. And that's why we're doing these webinars and try to make it as entertaining as possible. We also want to be able to interact with you guys and kind of gauge like where we can help in like that gap of knowledge. So if you guys have questions, if we're talking lingo, like guys, we're accountants. And so we tend to go into accounting lingo and we don't realize it. So just stop us and be like, hey, what does that mean, Kat? What does that mean, Sarah? So that we can kind of get better at that. So that's also another reason we're doing this webinar, is we really want to be able to learn how can we better help. Because I think a lot of professional CPAs, bookkeepers, we all get tangled into that lingo. And we want to kind of break that down so that you guys understand, because, accountants are just very technical. And I think a lot of people get intimidated in asking questions to their CPAs because, they're like, well, I don't understand. So we're kind of trying to do that. So that's what we're going to be talking about today. We're going to talk about things that your CPA might not ask you because they probably think that you're not going to understand, stuff like that. But we want to really kind of show you like what they would really like to see. I did taxes for probably 3 tax seasons because I had this whole thing where I created a bookkeeping slash tax firm, and that was a complete I hate this. So I hated my life for 3 years. And I was like, I thought that was going to retire me. And I was like, yeah, that's not happening. So that's when I started investing in real estate. So with that being said, let's get started on the presentation. I did a quick Canva, let's see, and how do I do this? Oh, wait, all right. All right, you guys can see my screen now?
Yes.
All right. So first things first, let's talk about bookkeeping versus taxes. I think a lot of people do their bookkeeping and they're like, they just think taxes. And so Sarah and I are going to be telling you is every time your books are not for your taxes, they're for more than your taxes. So, bookkeeping really tells the story of business, where it's been, but also it tells you where it's going. And I think a lot of people get stuck because like taxes are just reporting what happened, right? And they do it in a different way. Like you have deductions and you have all these different things, but bookkeeping really tells you where your business is at, where it was, and where it's going. And the going part is really what matters in the whole bookkeeping scheme. So understanding that your taxes are only telling you the past and bookkeeping is completely different. I think, yes, bookkeeping helps you get better taxes. And that's where what we're going to be talking about today. Like, how can bookkeeping make your taxes better? And the problem is when you don't do good bookkeeping during the year, then your taxes are not going to be good, which means you're going to miss out on all these tax benefits that were sold, right? Taxes like real estate is great for writing off taxes, but only if you have good books, right, Sarah?
Right. And I think a lot of people don't realize when they, if you just send bank statements to your tax preparer and they're like, okay, it's going to be $8,000 to do your taxes, most of that chunk is doing the bookkeeping to prepare your tax return. That's where they spend most of their time at, like getting all that organized. So even if you have, some kind of smaller system, you could greatly reduce that tax, the your tax invoice for the tax prep with that. So I mean, that I've seen that help people, in huge ways.
Yeah.
And when you're just starting out, even $1,000 is huge on your cash flow, especially when you just have one or two units. It could like completely make you into a negative cash flowing company when you're just starting out. So those little things are important to help. And I think it's easiest. A lot of people think, oh, I'll learn about bookkeeping and accounting later when I get bigger and everything. But it's so much easier now to just spend literally 5 minutes a month. You don't have to do anything. If you have one unit and it's long term and you get one rent payment a month and you have one mortgage payment a month and that's all you have, just spend 5 minutes to look at those ins and outs and see what's actually going on in your bank account every month. That is enough to make you more of an expert than 90% of real estate investors that don't ever even look at their bank statements.
Yeah. Yeah, and you don't have to spend a lot of money. There's free software out there. Like if you're starting out, you can use Baseline, you can use Stessa. Like those are free. Those are really good for starting up. And it makes bookkeeping a lot easier than tracking it in a spreadsheet. Now, if spreadsheets are your thing, by all means, but I always kind of recommend the software because it really just helps make it a lot easier and reduce the time. Um, so being ready for tax season, like Sarah mentioned, is really just having all your stuff ready, like to go for the CPA to really just look at your books and prepare your taxes. Because if they're spending time doing your books and cleaning up, they're going to miss out on the big picture. They're going to spend time cleaning up and not strategizing, right? So things that you're going to have to look at, like all your income or expenses are recorded, like you have all those together and they're recorded by property. A lot of times we have one bank account, everything goes in there. And then by the end of the year, we have to figure out was this expense for unit, 123 Main Street or 234 Main Street, right? You want to make sure that your bank accounts and your credit card statements are all accounted for, that you capitalize expenses. And when we say capitalize, these are your what we call rehab, right? Like your big items. Those cannot be expensed. There's like IRS rules that said, these larger expenses needs to be capitalized and then depreciated. So a lot of times everybody just puts everything into the repairs category, and you don't tell your CPA that that is not that was a rehab, and then they go and expense everything, and then IRS can come back and say, hey, these write-offs were not acceptable. So usually having that separated, each property, and then just being ready is like being able to answer the question, this is how much I made at the end of the year. And a lot of people don't know how much they made per property until their tax return comes back, right? But in reality, those tax returns are not the real picture of your books, right? So really just having that clarity ahead of time, like usually our books are ready, like my own personal books, they're ready by January 5th, right? And I don't have to worry and stressed out or like, oh my God, what did I forget? And I used to do that. Like even as an accountant, my first 2 years, I was just so focused on the go, go, go that I was like, I'll do the books later. I know what I'm doing, like not a big deal. And then I'm struggling in March trying to get these returns filed, and trying to remember, like, do you remember what this happened? I couldn't remember anything. So even as an accountant, I kind of fell off the wagon at the beginning. And so this is why I really like tell people like, do it. Don't be like me. I'm a bad example. But yeah.
They say the cobbler's shoe never, or the cobbler's children never have shoes or whatever like that. I felt the same way the first couple of years of mine too, because I was like, oh, that's easy peasy. I do this all day long in my sleep. And then me and my husband sat down and I was like, why did we buy this? And I'm like, had we done it like that month or even within 3 months, every quarter, it would have been so much easier to go through. But now I hire my own company. I literally pay my own bookkeepers to get my stuff ready because I uh I don't have time for it, but I do need it done. So, and they force me to sit down and do an accounting meeting with myself and my husband and look at the numbers. And it's literally maybe 15, 20 minutes a month. It's not a huge undertaking. And they probably spend right now we have three long-term units, two short-term units, and a laundromat. and they probably spend less than an hour on all of our stuff. Because we have property managers and co-hosts and everything. So everything's pretty smooth in that respect. So all in from them and from me and my husband, less than an hour a month to manage our bookkeeping for our portfolio.
Yeah. I remember I was actually looking at some pictures of like the past, and I saw a picture of me with a whole bunch of like receipts that because I keep trying to get my dad on board with this, but you know, he's older, and he'll just give me a whole bunch of receipts and I have to figure it out. So I've gotten his systems a lot better, and but that was a mess and it was really stressful for me. It's still stressful because I still keep fighting for him about some of these things right here. So common mistakes that people make with tax season that makes it so difficult. So mixing personal and business spending. So a lot of people either have a personal account that they use for business or business account that they accidentally charge personal stuff in there. And so having to go and dig through that is a pain. So for example, my dad sometimes tends to send stuff over um, to people like, oh, I just didn't have Zelle on my own. And so he starts sending stuff from his business. And I'm like, no, you cannot do that. It just makes life so painful. Business is business, personal is personal. Even if you have a personal card because your properties are in your business, even if you have personal card, you use it only for the business. So like you assign a card, you say, this is the card I'm going to use for business, and I'm never touching that for my personal expenses. It would just make your life so much easier. Other things, reconciling. So a lot of people don't understand the term reconciling, but that's really just looking at your bank statements. And then you should have, you know, like QuickBooks, Baselane, Stessa, they'll have like a feature where they tell you what your cash balance is. So what happens sometimes in these software is that they could get disconnected. And so you could be missing a whole bunch of transactions, and you'll see that your cash balance in your software does not match the cash balance of your bank statement. So really just checking that and making sure that it matches will make sure that you have everything complete. The other thing that people make a mistake is that they treat everything as an expense. Nothing is capitalized. Like if you replace an HVAC, that's not an expense, that's a capital improvement. So that needs to be capitalized and depreciated over 27 and a half years. A lot of people will send themselves money, right? And they're like, oh, I'm going to send myself a distribution. And they treat that as an expense. That is not an expense. That is a owner distribution, needs to be categorized as such. You don't want that to go into the expenses. Miles, missing mileage. Like a lot of people forget to track their mileage. You can actually deduct that. Home office expenses, that also can be deducted. A lot of people don't think about that. But in order for you to be able to deduct that, you got to kind of keep track of those expenses. And then biggest mistake is waiting until you're required to file so that you can start doing your bookkeeping for sure. Any other stuff, Sarah, you want to add to this?
No, I think you've covered quite a bit. I just wanted to ask the people here if you'd throw in the chat like where you're at in your real estate journey, if you're brand new and you have 0 units or if you have a few units, just let us know where you're at so we can kind of see what's going on here. I think Kat knows most of you, but I want to get to know you as well, and hopefully you'll come back every month to us and we can get to know you better.
Do you want us to say it or just write it in the chat?
Either.
works.
Well, I'm Victoria. I started investing in 2021. I have 10 doors. My bookkeeping is meh. It could be better. I like to do things for myself, so that's why I'm here. Because I do have a bookkeeper, but I want to do it myself.
I absolutely love that because I think a lot of people will outsource it and still have no clue what they're looking at. And then 3 years later, they realized that that bookkeeper wasn't aligned with, their goals and what they should be doing. So I 100% agree. Even if you outsource your bookkeeping, actually, especially if you outsource your bookkeeping, you need to know what to look at in those reports and to make sure they're actually doing what you need to do. I have seen so many people come to me and be like, yeah, I don't need a cleanup for the year because I've had a bookkeeper, but I'm ready to switch. And it's like the middle of the year. And I go back and look and like they've never like reconciled their mortgages. So they've never taken interest expense in like 3 years. And I'm like, oh goodness, we need to correct this. And that it, once your portfolio gets really big, it could be a huge you know, expense on your business. So yeah, I think it's great that you're being proactive and looking at that.
And I just want to make sure that, it's November. It's not too late to get stuff going. We got plenty of time. Any other questions? Anybody has questions here? No
I have a
questions?
question.
Yeah.
How do we feel about virtual bookkeepers from like out of the country as a way to like save money on a bookkeeper?
I'm all for it. I have several clients that were growing very fast, and that's what I recommended to them. And so we have offboarded them from our monthly bookkeeping to their VA in the Philippines, and then they still pay us for a monthly meeting where we come in and make sure their VA is doing things right. And that's basically, we look at the balance sheet, the profit and loss, accounts receivable, whatever is important to their situation. If you have a property manager and it's other stuff, then you may not need to look at your accounts receivable. You may just need to look at the owner statements to make sure it's doing right. But I am all for that. I'm all for like saving money and time and everything. I know having tailored for you bookkeeping services can become very expensive. But the Latin America has a lot of great VA bookkeepers as well. I've been seeing a lot more of those companies come up, and they're in better time zone than us. And I think the Philippines still a lot cheaper, but yeah, 100% on board with utilizing them. Yeah, just make sure you vet them. Most of the what are they called? The recruiters that help you find the VAs in the Philippines, they can help you take give them an exam to make sure they actually know what bookkeeping is, and they're not starting from scratch, because you don't want to have to, well, and maybe you do if you're that familiar with it, but for the most part you don't want to have to start from scratch teaching them what bookkeeping is. You want to kind of go into it with them having a little knowledge.
Yeah. And we have the recording. Melissa can shoot you the link for our previous call, which actually talked about like how to vet and find and work with a bookkeeper, and we did deep dive a little bit into this topic. Any other questions, guys? All right. All right, so we'll get into the nitty-gritty. All right, so how do we get started to setting up a solid foundation? So we want to separate bank accounts for each entity. This is a requirement. You don't have, I don't necessarily, I'm not a big fan. I don't know about you,
Dad,
Sarah.
it's saying it's not showing us. It says
Oh,
enter full screen mode or something on there.
hmm. Let's see. Is it better now?
No, it still says, there's a big black box that says audience window, enter full screen mode.
Oh. Mm. All right. Can you see now?
Yeah, that's it.
Okay. So separate bank accounts for each business or entity. I'm not a big fan of separating accounts per property. I don't know about you, Sarah, but That's too many bank accounts, like, especially when you start scaling. Like if you have 2 or 3 properties, not a big deal. But once you have like, 20 properties, it just becomes so difficult to reconcile that many accounts. So I'm personally not a fan, but I know a lot of people that love it. So what are your thoughts on that, Sarah? Just curious. A lot of people ask.
I'm the same. I think it makes more bank statements to keep track of, and usually there are other ways, especially with base lane, and even if you do one of the smaller QuickBooks accounts, it's so easy to set up rules, and it's like if you have, this, you can set up like this amount from this person, and you can set up like, okay, this goes to this rental property and this goes to this one, and it can automatically go in there. So yeah, and also a lot of business accounts, they charge you like, $5-10 for each account, and that can add up your expenses really quick too. I know a lot of people teach that to keep it straight and everything, but not a huge fan of it from
Yeah.
from my perspective.
And yeah, and it's fine when you're like doing your own bookkeeping, but what happens is once you start hiring out, a lot of bookkeepers will charge you for the amount by the amount of bank accounts they have to reconcile. And so that also will come into account when you think about that. Like if I tell a bookkeeper, hey, I have 5 entities, but I have 15 bank accounts, they're going to charge me more, whether when I say I have 5 entities, 5 bank accounts. No, I do have like some extra accounts that I keep like for reserves and stuff like that that are extra, but those are kind of, there's not much activity there. And then having a clear chart of accounts that is for real estate specific. A chart of accounts is really just a list of categories. Like this is your rental income, late fees, all these different like stuff that you collect, and expenses. One thing that I didn't do at the beginning, but I started doing a couple years ago was on my capital expenditures. I used to be like improvements and everything, you would just go there. So whenever I did a rehab, it would be like, 100, like just say $50,000, and it would just go into one account. I started breaking this out about 3 years ago because of the bonus depreciation. So I do break out like main items like flooring, roofs, HVAC, all these different things, because my accountant will be able to bonus depreciate anything that has a life of 15 years or less, which would be like my flooring. So he starts bonus depreciating my floorings, my appliances. So that really helps with my tax deductions. And so being more transparent and more detailed has really helped my accountant and also ourselves to be able to take advantage of tax stuff. So that's why these little things are important. And if you guys don't have, if you guys want to see like an example of a chart of accounts, what I'll do is on our post-class email, I'm going to attach the one that I use. You guys can see what that looks like. So you want to have a bookkeeping system that you actually use. So a lot of people say, QuickBooks is just too difficult for me. I don't understand it. It's not user friendly. So don't use it. Don't use something that you don't, if you don't feel comfortable with it, don't use it. Do something that works for you. To go and look at different things. There is Stessa, there is Baseline, there is RI Hub. Preferably, I love QuickBooks because it just kind of has a lot. And if you're going to outsource eventually, QuickBooks will be the best way. And Sarah's actually working on, I don't know if this is public knowledge, but Sarah's actually working on a little course that will help people like how to use QuickBooks in a user-friendly way. So that kind of works. But at the end of the day, like if you're going to set up a very complicated system and you're not going to use it, then it's not going to be worth it, right? So try to do something that you can stick with. A lot of people are like, oh, I'm going to do spreadsheets, but they hate working on spreadsheets. So then don't use a spreadsheet because you're probably not going to update it, right? You're going to forget.
Yeah.
Like I tried doing the spreadsheet thing, and I'm like, yeah, it's not working for me. Even though I'm really good with spreadsheets, it's just I forget. And then have a monthly routine, like Sarah was mentioning, like once a month, sit down, have a quick meeting with yourself, and just kind of look at things. And so Jamie's a big systems person. Jamie, you also do something like this, right? You have like a weekly or monthly meeting with yourself, right?
Sorry, I went to get some water. But yeah, I outsource my bookkeeping, but like I meet with my bookkeeper once a month. But then like I have a weekly, it's more like on the revenue side of like, keeping track of making sure I'm hitting my revenue goals. But like one of my mentors taught me that the more you look at it, like the more you think about it, and then it kind of sets the tone kind of for the week. And then I think one thing that for me that kind of sometimes can get missed is like the big like, activities. Like I bought something, sold something, or opened a new account and things like that. So that's what I talk to my bookkeeper about, once a month, and keep track of those things.
Yeah.
I love it. I feel like the biggest hurdle, I say the biggest, I feel like one of the bigger hurdles I hear is analysis paralysis in all of these areas. And I think the best thing would be to just get real with yourself, because there are so many softwares out there that you can use, and there's so many options for any of it. But just get real with yourself. What does your budget allow? What does your brain capacity allow? It could be a simple book where you don't even keep track of every single thing. You just kind of, pencil out the big things, and just get in a routine. I Along with the course, I'm coming out with kind of a mini ebook about mindset about it. And I am a huge fan of Atomic Habits and just starting 2 minutes a month and doing something more. If you already have like part of a bookkeeping routine, then you can, add 2 minutes more. What extra report could I look at? And you don't have to know anything about it, but look at it for a few months. And if it makes sense, if it starts to make sense and, is important to you, you can do it. You can look at profit margins. You can look at different ratios. Just start adding that to that, because the more you know, and the more I think ratios are a huge, like they're one number you can track, and you can remember that every month instead of every single line item. Oh, this is more, this is more. Just find something like that. And then if you, right now, your bookkeeping routine is absolutely nothing, you just turn in stuff to your preparer at the end of the year, then start very small with just looking at the bank statement and trying to decide on which route you need to be. But getting in that simple routine, start super small. And if you're kind of stuck and you want to do more, then just add one small little 2 minute task onto your routine you already have, and just keep it simple. The chart of accounts she mentioned on there, that's a huge one. People get analysis paralysis. Like, where does this go? Just keep it as simple as possible.
Yeah. Yeah, I think for the chart of accounts, the main thing, we kind of touched base already on this, but the main thing was just kind of like making sure you track your owner when you put money into the business, like you sent, $1,000 to cover for expenses. Make sure you track that separately. Your loan versus principal. So, whenever you make a payment, a lot of people would just put, your payment is $1,500, and you'll put like the whole $1,500 dollars to principal, like to your mortgage expense. Well, you got to break that down between, does that include escrows for your insurance? Does that include principal and then interest, right? Because your whole payment is not really reducing your mortgage, and you want to obviously take that interest expense as a deduction. And a lot of people think that their CPAs are going to go through their books and like really dig into detail. And let me tell you that they don't. If you did not hire them to do that, they will most likely just put your books the way it is. Maybe they'll ask you a couple questions here and there, but if you don't provide them all the information, they're just going to assume that, okay, this is what you gave me. Because at the end of the day, you're signing off on the tax return, not them, right? You're signing off that the information in that return is correct. And what the CPA is signing off is that they got the information, and that, what they don't know, they don't know. So it's just really important for you to kind of keep in mind that you want to separate these main things. And then the capital improvements, what you could do, and what a lot of people do is, let's say you have no idea how to categorize something, you could put it onto a category called Ask My CPA. And then he can go through all that and be like, okay, these should be this should be that. So you don't have to have the answers for everything, but just be able to know that, okay, if I'm unsure, I'm going to mark this as unsure so that I can ask my CPA of how this should be treated.
I think that goes a long way for your accomplishment. Like when people sit down to do bookkeeping and they're like, "Oh my gosh, I'm gonna have all these decisions to make." If even if you just put them all in, ask my accountant that day, get that accomplishment, check it off. Okay, I've reconciled this account. Sure, 50% of my transactions are in ask my, accountant or ask my CPA, but you can go in there at any time and look at them. And I guarantee you, when you get smaller chunks like that, a week later, spend 5 minutes and look at that account and something will pop out at you and you'll be like, oh yeah, I forgot that goes here. And so then you can, slowly take chunks at that and then ask your CPA about it when needed as well. And about the owner contributions, I have seen many times people just send their information to a bookkeeper or a tax preparer, and owner contribution deposits get counted as income because they are not specifically on there. And so you've got to really check that, early on. When we're starting these companies, we've got to inject a lot of cash in there, and so we need to be very diligent that that doesn't get counted as income, and we have to pay more taxes through that way too.
Yeah. And those big transactions, like Jamie was mentioning, like your refinances, your closings, like sometimes you send a lot of money to do a closing. Like if you don't know how to categorize those, make sure you put them into a category that's called like review or like the ask my accountant, because what could happen sometimes is that those refinances can get counted as income. They might forget to remove the old loan. Like there's just a lot of different things that need to be done whenever you purchase, sell, or refinance. And so if those are not done correctly in your book and your CPA doesn't know it, then they might do your taxes completely wrong. So one of the things that we're going to be talking about next is what your CPA wants and probably needs, but won't expect for you. So there will be one of the main things that you should provide your CPA, and a lot of people don't think about this, is your closing statements, refinance closing statements, your sales and your purchases, so that they know, okay, this person sold stuff this year. We got to look at this in more detail, because there's your depreciation, your capital gains, all these different things. They get taxed differently. And you want to make sure that you don't get taxed for a refinance. Like maybe it gets put as a capital gain by accident because they don't know what you did. They think you sold a property. So just kind of have a lot of these things. A profit and loss is one of the things that they ideally expect from you. A balance sheet. Now, not everybody has a balance sheet. A balance sheet is kind of the net worth statement of a business. And this kind of has a list of all your properties, all the improvements, all the capital you injected into the property, all the debts that you have on the property. So if you don't have that, you at least need to have like the list of your properties, a list of how much you pay for them, a list of how much improvements you put in them. You need to have a loan schedule, like what are the loan balances for all of your stuff. And then you get your loans balances and your interest paid on your 1099s, or I think 1099, 1098s interest. Every lender will send that to you via email. Make sure you have those and you put them on a folder. And I'm going to show you an example what that folder should look like. Your list of capital improvement, that's very big. So if you did a big rehab, if you don't do anything else, just make sure you track those so that you can have those included. Because if you forget to include these, right, and your CPA just puts your purchase price as your depreciation basis, then when you sell a couple years from now, and let's say you bought a property for $100,000, you did $50,000 in improvements, but then you put these all, or you forgot about them, what happens is when you sell, your base is not going to be 150, which is everything you spent, but it's going to be only the 100,000. So you're going to miss out. You're going to have to pay additional $50,000 in taxes because you forgot to put capital expenditures in there. especially when it's your first property. A lot of people just spend a lot of that money on their personal accounts and they completely forget about a whole bunch of expenses. So that's very big.
Yeah, the big thing about that is usually anything over $2,500 gets capitalized, but that can be for a whole, project too. If you're doing a full bathroom remodel and you spend $25,000, but it's all in little chunks of $1,000 here, $1,500 here, you can lump all of that into one remodel and put it in a capital improvement, because capital gains taxes, when you go to sell it, are far more than what your regular taxes would be when you expense it that year. So you want to get as much as you can in capital improvements for the long term effect of that property.
Yeah. And then one thing that a lot of people don't do is to have a document with explanations and notes and questions for their accountant. So I'm actually going to show you guys that on the next slide, but I have a 3-page document because I have a lot of entities, and I literally go by entity and I tell them, hey, I didn't buy anything. I refinanced this. I did this. I did that, to let them know what happened during the year, and also to remind myself, like, okay, this is what happened during the year, to make sure that I provided everything that needs provided. But like you see here that I said I sold 3 properties, and I provide him the link to the 3 HUDs and which are the properties. I say, this is the capital improvements that I did. I refinanced this loan. I send 1099s because they need that information. And then I provide financials. And what that folder looks like for my CPA is kind of like this. And it just kind of has my business financials, forms that I received. And within that folder, I separate between personal and business. If I have payroll, so I provide that. Receipts that I save. Now, normally I usually just keep my receipts and emails, but if I have like physical receipts that somehow make it here, I'll put them in here. And then 2025 support, so I provide like my HUDs and everything in here for anything that I did. And then I have my notes. I get this link, I send it to my CPA. He has everything he needs. And he actually loves me. I know I'm not going to be one of the ones getting fired. So he loves this because he doesn't have to ask me anything. He's like, okay, I have everything here, and he'll look there before he comes to me. And then when I provide those notes, he already knows what I did and didn't do. And he's like, hey, I might need this information. But if he doesn't know, then he has to figure it out. And when you're looking at books, it's really hard to tell these transactions unless you actually call them out. And then I provide the financials by entity, separated, and that's what that folder looks like. So obviously you don't have to link all these things, but you can just make it very simple, straightforward. I didn't buy properties. I bought properties. This is the HUD. This is how much I paid, like things like that, just to give your accountant information and also to refresh your mind about what you did during the year for each property. Because if you guys are real estate professionals, you also going to have to provide a log for what you did during the year, right? And ideally, you want to track that on a monthly basis. But I know all of us don't do that. So this kind of helps you kind of go back to what you worked during the year. Anything else on this tips, Sarah? Or like what you see, what you do with your clients to organize for their accountants?
Yeah, I think that's all amazing. I love the Google Drive. We use something called a statement of real estate owned, which is just a simple Excel spreadsheet that we use, and it goes out really far. Is this property still active? Did you sell this property within the last 12 months? And we keep that, and then when they do sell stuff, we move it onto a new tab, and old property. And we even keep things like the monthly mortgage payment amount. So when we're categorizing transactions, we can remember all that, what utilities are associated with it. We do most of that on our schedule of real estate owned. It's a very long, it goes way out document. There you go. Like
So
that.
I first mentioned, I do provide this too. So this is the Bible. It's the real estate Bible, I call it. It has everything that anybody needs to know about a property. And if you guys don't have one of these, you need one. This has your mortgage services, your interest, your mortgage balance at the end of the year. Is it escrow? Do you have a partner with that? How much of that you own? Here's your CapEx purchase price. And then from there, you separate it. I don't do a different tab, but I do separate it between what I have and what I sold and when I sold it. So if you guys don't have a real estate owned schedule, you guys definitely need one of those. So who doesn't have a real estate owned schedule? Don't be shy. It's okay.
I don't have that.
All right, and so
this can look overwhelming, but you know, just get one started with the address. Like, what addresses do you own? And just start adding information as you see it become relevant. Anything that you keep looking up, you're like, I don't know where this amount goes, and you go in and you know, you can add that information that month. And, you know, over time, you just get it filled up. It doesn't have to be, I have to sit down for 5 hours and get every single piece of information here. But just again, I love Atomic Habits. Start small, get those addresses on a spreadsheet. And as you like keep having to refer to information, we have links in ours. We have links to the Google Drive for the closing documents. We have links to, any other you know, big receipts and stuff like that, so we can you know, trail down there and refer back to it. And we work closely with our clients' tax preparers at tax time. So we prepare this for our client, and we will also share it with their tax preparer so they can have it. We do put a lot of stuff, a lot of the bigger closing documents within the QBO file, but this is just another place where they can kind of go and see a big, you know, overview of the property and what we've done.
you know, and we could, Sarah, maybe we can work on doing a template version of that.
We need to do that. That could be a good, yeah,
Yeah. So,
a good
but
freebie.
yeah, start small. Like I didn't like this didn't look like this obviously when I started. I've been adding stuff all over. Like this used to be one tab, now it's like a huge ass tab. But this is kind of, it started with column, and then I was like, oh, I need this information. And I added that and I added that. Especially when you start borrowing and they start asking you for stuff, it just comes so handy. And so we are about to run out of time. So let's just roll real quick with any other big stuff. So main thing is, you guys, you have still November, a little bit of November, and you have the entire month of December. I would urge you guys, if you don't have anything set up, to kind of start thinking about that now, like today, be like, "Oh, I want to think about what's best for me," and start doing that. What Sarah keeps mentioning, you know, that little atomic habit of like 2 days, 2 minutes a day, what am I going to do? And then I would recommend, if you have an accountant, try to set up a call with them before the year ends to see if there's anything you can do to improve your write-offs and stuff like that, especially if you had like, if you're completely new or you had a lot of activity. They can help you figure out, okay, what can you do before the end of the year so that you can reduce your taxes. If you wait until January, it's too late. There's nothing they can do, right? They can't go past and fix what you needed to do. So I always urge people to have a call with their CPA before the year ends. We're actually going to have one scheduled. We always have two check-ins. We have one mid-year, and then we have a second check-in at the end of the year to kind of see where we're at. And it really helps us make sure that we reduce our tax liability.
Right now is the best time to catch your tax preparer. They are in a great mood. They are, you know, happy about life right now. Come January 1st, that they're going to get calls from everybody else, and it's going to start, like, their calendar will start filling up really quick. I've helped a lot of my clients get on the calendar for their tax preparer for usually we try for November, and this week I have had tons of meetings with clients who already have their tax strategy, and we're looking over their books to make sure we've done things that the tax preparer wants, and so we can go in strong to close the year and everything can go smoothly as possible in January.
Yeah, it's definitely the time. The other thing that I want to say is like, now that we're talking and we're going to have these monthly meetings, maybe see them as accountability meetings to remind yourself of like what you need to do monthly. And you can be like, okay, whenever the next webinar is, like, I'm going to have my books ready by then or something like that, just kind of find something to keep yourself accountable to start getting things done. We can't fix the fact that, maybe you didn't have your books ready the whole year for 2025. But 2026 is going to be a good time for you to start fresh, for you to not have to be like overwhelmed. So January 31st, we're going to kind of have to start thinking about that so that you can get better throughout the year. So maybe what Sarah going to make January like an accountability month or something. And then start reviewing your transactions little by little. Like, don't go and try to do all your books, by tomorrow, because you're gonna get overwhelmed and you're gonna be like, I give up. So just try to be like, I'm gonna tackle, 5 transactions a day. Very simple. And then just see where that takes you. And then you can start preparing that Google Drive folder, like start looking for the files and just kind of start dragging things over. And just kind of do it slow. Like, don't go and start trying to become like 10x from today to the end of the year. Like, just take it easy, and we'll just hope that by this time next year you'll be like, tax was a breeze. Like, I'm not stressed out about taxes. And
That's the goal. Get everybody thinking like that. We got to change the mindset around bookkeeping, accounting, and taxes.
yeah. So being ready really looks like, at the end of the year, you come down, you just download you two reports, you drag everything into your folder, and you just let your CPA do whatever they need to do, and you move on. So that is the goal that we want to get to. It took me, a couple years to get there, but we now have systems and processes for that. I have a bookkeeper that does a lot of these things for me. And one thing that I'm working on right now is my tax SOP, my tax prep SOP, which is me just telling my bookkeeper what he needs to do on an annual basis. And what I'm going to do is I'm going to share that along with the slides and this video recording on the email that we send out at the end. And then Sarah and I are going to work on that template probably for next year to give you guys that real estate on schedule too.
Love it.
So thank you guys for being here.
Yes, thank y'all. Thank y'all so much. So good to get to know you a little better.
Thank you. This was super helpful.
Bye, guys. Stop recording.